Hello, everybody. I'm Scott Jones, the Director of Forest Landowners Association, and thank you for joining us for today's online learning series, Forest Taxation, Just the Basics. We're happy to bring this online learning series to you as really an essential component of land ownership and management in this country. As an organization, we work and strive to ensure the success of private forest landowners so you can be economically successful today and for generations to come. A key component of that, of course, is markets, regulatory certainty, and fair and certain taxation. The long-term nature of our investments that we make in our forest, it's essential that we understand how we're taxed and how to take advantage of those components of the tax code that allow us to continue managing and give us the incentives that we have to continue investing in our forest lands going forward. So today we're joined by Dr. Greg Frey, who's a research forester at USDA Forest Service Southern Research Station. Greg, most of you might have seen his bio already, but his work involves using economic methods to evaluate the impacts of forest policy, regulation, and taxes. And he's been key to helping rewrite the Forest Landowners Guide to Forest Land Taxation, which we are eagerly anticipating and waiting for. But thank you, Greg, for taking on that important work. It's important to all of us as landowners. Greg received his PhD from NC State University and has previously worked at the World Bank and also for Virginia Tech Cooperative Extension. Greg is going to go through his slides in his presentation. He will have time for question and answers at the end of the presentation. We encourage you to post your questions as we're going along in the Q&A box at the bottom of your screen. And then Katie Moss, who's our Director of Stewardship Initiatives and Regulatory Affairs, and I will help moderate that Q&A session at the end of the presentation. So thank you all for joining us. And Dr. Frey, if you could begin. And you are still, yeah.
Apologies, yeah. Never fail to forget to unmute myself. I've been at this Zoom stuff for 3 years and it still don't always get it right. Thanks, Scott, and thank you everyone for joining us. Again, my name is Greg Frey. I'm a research forester at the Forest Service in the Southern Research Station. I'm located here in North Carolina. And today we're just going to cover some of the very basics of income of taxation of private forest lands in the United States. As the title, hopefully you captured from the title, this is really just the very basics. We're only going to really kind of scratch the surface of forest taxation. So there's a lot by its nature that I'm not going to be able to really cover today. And we do encourage you to any topics here that you might get interested in or need to find out more about, to talk to your tax advisors. So again, this is not legal or accounting advice at all. This information is for educational purposes. I'll just say I apologize. I have someone is putting messages, and I hope that's not blocking the content of the slides at all. Someone's sending me messages. I should have shut that down before I turn it on, but there's like slim little boxes coming up in the corner, so I apologize if that continues to occur.
It all looks good here, Greg.
Okay.
All right.
The so each taxpayer's situation is a little bit different. Everyone's unique. Everyone's situation is unique, and all the facts and circumstances go in and play a key role in what your taxes will be. So I can't anticipate everyone's situation, and there's just so many nuances here that one needs to be aware of. And again, this is just an overview presentation. It's more for education and awareness raising rather than like a concrete thing that you can take straight into your 1040 form. Again, so tax law is complex, changing, and this is not tax advice. It's just for awareness raising. So surveys show that taxes are consistently one of the major concerns of forest landowners in the US. And they actually, financial analysis show that taxes are one of the major costs of owning forest land. So proper tax planning, really, if you're interested in your forest land as a financial return or asset, proper tax planning is just as important as silviculture or forest management. Likewise, on the government side, tax provisions are one of the main ways that governments can compensate landowners for the many ecosystem services that they provide, such as clean air and water, and also one of the ways that forest landowners can be incentivized to keep forests as forests and to participate in active forest management. So that all that said, a lot of forest landowners, foresters, forest consultants, and even tax advisors are not really familiar with how the tax code interacts with forest land ownership. Forest land ownership is unique in a lot of ways compared to, say, agriculture. It's different than owning a rental house and renting it out. So there's a lot of unique ways that there's not a lot of provisions that are specific to forestry, but they interact with forestry in a very specific and unique way. So the first thing I want to just say is that very few people really have all of the knowledge that you'll need to manage and plan fully all of the aspects of managing forest land. You might need advice from an attorney, an accountant, a forester, or other specialists as you go through the process of owning and managing your forest land. So if you get this advice, what's your role as a landowner? Well, your role is you're the team leader. You, the forest landowner, set the objectives. You tell your team, here's what I'm trying to do with my forest land. But it's also important that you understand like the basics of forest land ownership management and also taxes so that you can kind of understand the basics of what you're asking your accountant or your attorney or your forester to do. And you'll need to monitor progress as that goes along. So there are lots of types of tax that can impact forest land ownership. And these are a few. Hopefully this all fits on the screen that you're looking at. Most of the different types of taxes are state and local taxes. And then there's also the federal income tax. Not every state will have all of these different types of taxes. So the first one I'll talk about, I'm going to talk about these two today, a little bit about property tax and a little bit about the federal income tax. Because these are the two most common concerns and questions that forest landowners have. And I'll start off with a little bit about property tax. So hopefully this all fits on your screen. This slide says, well, in what state we've done these surveys and interviews to find out where is it that people are concerned about property tax? Well, in every state in the US, forest landowners are concerned about property tax. So that's one side of this. But if you look at the other side here, every state in the United States also has some kind of program that will help lower property taxes for forest landowners compared to what it would be taxed under in its fair market value, or what's called the highest and best use. So every state has a different program. They all have different rules and requirements, but there is some kind of program that you can enroll in as a forest landowner to lower your property taxes. In some cases, this might be combined with a program for agricultural land. In some cases, it might be totally separate from the agricultural program. In some cases, they have certain requirements of what's allowed and what's not allowed. Okay, so you may look into it and find out that, well, it doesn't allow something that you really want to do, so you can't enroll in it. But the baseline is there is some program in your state, if you live in the if your land is in the United States, that you can enroll in. They're also highly variable in the amount of money they can save you. There's just a really wide range of taxation. This is an estimate, right? So each individual person, depending on your land, where it's located, what the fair market value of that land is, according to the tax assessor, how much money you can save. And also it depends on, what they use as the tax rate for forest land. So if you just look towards the middle of the country to where you see the Colorado CO is it will save you about 59 cents an acre. You look right next door to the east of that in Kansas, we estimated that enrolling in that property tax program could save a landowner an average of $60 per acre. So this is just really highly variable from state to state. So what else would you need to know? There are differences in the regulation, what's required of you. So in some states, you may need to have a forest management plan in order to participate in that particular program. I, as having a little bit of a background in forestry, I always encourage landowners to have a forest management plan anyway, just as good sense in figuring out what they're going to do with their land and kind of meeting what they want to do and how they can meet those objectives. But in these states, at least, it's required to have that to participate in the property tax program. There's also a difference in the penalties. So if you enroll in this program, you're basically saying, I'm keeping my forest land as forest. And in some states, they might say, okay, keep it in as long as you keep your land as forest. And when you opt out, just let us know and we'll put your taxes back to where they were before and you won't owe any penalty. But in many states, there are some type of penalty if you withdraw from the program. So that might be a disincentive if you're looking to enroll for a shorter period of time. You might say, well, it's not worth it to just enroll my land for 1 or 2 or 3 years. But if you were to want to enroll it for a longer period of time, maybe it is worth it to you. So these are things that you should look into in your state. And where do you find out? Well, you can talk to your local tax assessor or your local forester. The state agency forester in your county or area should be able to give you a little bit more information or tell you what the rules are for that particular program in your state. Cooperative extension is also an option that would probably have most of the information you need. So that's kind of the bottom line on property tax. And I also wanted to touch a little bit on federal income tax because I know we're in tax season now. It's on a lot of people's minds. How does my forest land ownership and any income I generated relate to the federal income tax? So here's your basic 1040 form that most individuals send into the IRS every year. And basically, what we're doing here is this is the basic formula of how your taxes are figured. So if your total income is added together, then you subtract any adjustments and to get your adjusted gross income. then you get to subtract some deductions from that to get to your taxable income, which is multiplied by your tax rate. So the goal here is to do whatever you can that will help you increase the amount of adjustments and deductions you can get in any given year that are obviously legal for you to do, and to utilize provisions such as excluding certain things that might be excludable from income, and to put of your income as capital gains, of course, as long as that's allowed, instead of ordinary income, as the capital gains is taxed at a lower rate. And I'll touch on that a little bit more later. So what are some of the key terms that you'll hear when we talk about income tax for forest landowners? Well, the first one that's really important is profit motive. If you hear me talk about profit motive, that means you're doing what you're doing, whatever activity it is, you're doing it in order to make money. So you can imagine a whole bunch of things that you might not do to make money, such as recreational hunting, or chopping firewood that you use in your home that may not have a profit motive. Capital asset is basically an investment that has a lifespan of more than a year. Capital gains would be a profit from the sale of a capital asset. Deductions are things that you can utilize to lower your taxable income. So you subtract those from your income, and then the amount that's taxed is lower. So it's good to have more deductions. The basis is what are your long-term costs that you're not able to deduct necessarily in a given year, but you can save them up and deduct them when you have income from that particular asset. So for example, if you've spent some money to acquire some timberland, has trees on it, you spent that money, you can't deduct necessarily that money you spent to acquire that timberland right away, but when you in the future maybe sell those trees, you could deduct the cost of acquisition from the sale proceeds. Depletion is how you deduct that basis. Exclusion from income means certain category of money you receive that doesn't count as income for tax purposes. And then casualty loss is a loss of an asset that's sudden, unexpected, and unusual. So these are just key terms that we frequently use in forest income taxation. So let's get to the first issue that most forest landowners should be thinking about when they're planning ahead for their taxation. The first thing that a landowner basically needs to consider as they go through their process of planning ahead for future tax, or thinking about what they're doing with their forest land, is consider, is their forest land ownership activity a business? Is it an investment? Is it a hobby? Or is it personal use? So here we basically have 4 options, but they're distinguished they have one major distinction between these 4, where 2, the business and investment categories are the classifications of your activity that include a profit motive, which means you're doing it for money. Whereas hobby and personal use property have no profit motive, or the profit is not the primary motive. So how your activity is classified will determine which rules apply for things such as deductions. So it's really important that you get this figured out, figure out what's the most appropriate category or classification for your land ownership so that you'll know what's deductible, what's not deductible, and other things within the tax code that relate to these different classifications. So how do you tell them apart, right? That's the main question. Well, the main thing, as I said, is to look at the profit motive. And the key question you need to ask is this activity primarily to make money? And an indicator of that would be whether you have plans, records, and a history of earning money from your activity. Within that profit motive, there's two category or classifications, which would be either a business or trader business or an investment. The difference between those two is the trade or business has regular and continuous level of activity, whereas an investment is a little less frequent. And the way you can kind of think about that is in a trader business, you're working to earn that money, whereas in an investment, your money is working for you. It's not always so clear cut, right? I mean, there's levels of activity that may seem frequent to you, but not to the IRS. And so it's not always clear cut, but that's basically, and each case they're going to look at on a case by case kind of facts and circumstances basis. It's not like there is a set rule for like how many hours one needs to participate in order to be in a business versus an investment, but it's going to be the overall kind of overarching nature of your activity, whether it looks like a business or whether it looks like an investment. Now, if the activity is not primarily to make money, it may be a hobby or a personal use activity. It's not really essential right now that we get into the difference between those two, but just so you know, like activities that might be either hobby or personal use might be, well, this forest land is basically just a part of my residential land, and it's mostly there because I like it aesthetically, or maybe I like the recreation opportunities it offers, or even something that maybe makes money occasionally, but doesn't have a long history of making money. Maybe a lot of years you lose money, in a few years you make money. That could be classified as a hobby. Let's say, for example, you just like the exercise that cutting firewood gives you. I mean, a lot of people would think that's crazy, but some people enjoy it. And you do it, you like to do it a lot, and you sometimes you sell a little bit of the firewood. Sometimes that sale of firewood makes more money than you spent on the equipment and the fuel to do the log splitting or whatever. In other years, the amount you spend is more, so you have a net loss. And you don't really mind that much because you're mostly doing it for the exercise because you enjoy being out there and you like the fresh air. Well, that potentially is something where maybe you might want to call it a business, but maybe it's actually a hobby. So these are the things that you would have to look at with a tax accountant. So I'm going to just name 6 of the top tax provisions that are beneficial for timber and forest land ownership. And again, I'm just going to touch on these in really brief detail. And then I'm just going to mention them once here and then have like 1 or 2 slides on each one of these just to give you a flavor of what it's about and what the key issues are, so that then if you think you need to explore this more, you can look up information online or in a library or talk to your tax advisor. The first is the use of the long-term capital gains tax rate. There are some tax incentives for planting trees or reforestation. There's the possibility to exclude, I'm sorry, these are in the wrong order, exclude qualified cost sharing payments. I'll just read these in the order they came up. There's deduction of forest management expenses, potential deduction of losses, and the deduction of basis. So the first one is the long-term capital gains tax rate. So capital assets, when you sell them, are, if you've held them for more than 12 months, are eligible for a lower tax rate than ordinary income. It's called the long-term capital gains tax rate. Timber is generally considered a capital asset for a personal use, hobby, or investor class. So as long as you've held that timber for more than 12 months, it should qualify for the long-term capital gains tax rate. Business is sort of a separate thing because timber is not considered necessarily a capital asset. However, via a specific provision or section in the Internal Revenue Code, which is section 631, businesses also qualify for the long-term capital gains tax rate for timber, as long, again, as it has been held for 12 months or more. So the next incentive that a lot of landowners use is the reforestation tax incentive. And the way this works is if you have some expense associated with reestablishing trees, or it could be just establishing trees, say on an old farm field, or reestablishing trees on cutover forest land, or reestablishing trees on land maybe that was that suffered some sort of natural disaster. You would be eligible to deduct up to $10,000 per qualified timber property. And then the remainder of any additional above $10,000, you would be able to deduct in fractions over a 7-year period. So in the end, you're able to deduct a lot sooner the expenses related to reestablishing forests or establishing forests than you would if you were to just add it to your basis, which would mean that you would only be able to deduct it once you were selling that future timber rotation. Okay, the next provision, tax provision that is applicable to a lot of forest landowners is the exclusion of qualified cost share payments. So a lot of farmers and forest landowners are familiar with certain government cost sharing programs, such as the Conservation Reserve Program, or there's a lot of them in certain states, like in Virginia, there's a reforestation of timberlands cost sharing program. That's a state program that will pay for a portion of the costs to do some sort of management activity. There's a specific provision in the Internal Revenue Code, which is section 126, that allows taxpayers to exclude those cost sharing payments from their income if they are pre-approved conservation oriented programs. So there's a list of programs that have been approved by the Department of Agriculture and the Department of Treasury that they can be excluded from your income. So basically it's saying, you know, if you receive money from some government source normally, that would count as part of your income. But with these particular conservation programs, then you don't have to count that as income for tax purposes. So obviously that would mean that your overall taxes would be a little bit less. The next category is deduction or depletion of basis. So basis, again, are costs that you've had that you aren't able, costs that you've had associated with a particular activity, that you have a money-making activity that you haven't been able to deduct right away. And you basically need to keep an account or keep track of all of those costs. And then when you go to, for example, sell timber or make money from that particular asset, that's when you can recover those costs by deducting them from the income at the time of income. So the example here would be a timber rotation. Let's say you acquire some trees and they're 10 years old on timberland, and you're not able to sell 10-year-old trees. They're pre-merchantable. But then several years later, you come, so you're not able to deduct that cost in the year that you acquire the land, because that goes into your basis. But then you keep track of that, how much you've spent over time, and you might add some things in there if you haven't been able to deduct them in the year that you have the expense. Add them into your basis, and then once you have a timber sale, let's say your basis is $10,000 for that particular tract, and you do a clear cut sale, you sell all the timber, and that's $100,000. Well, you're only taxed on the 100,000 minus the 10,000. So instead of being taxed against the whole 100,000, you get to subtract your basis out. Now, if you only sell part of the asset, for example, you do a timber thinning, then you will deduct only a proportion of that basis. So if you sell half of the trees, then you would use up half of the basis, and the remaining part would the remaining basis would be left for a future date when you have more income from that asset. The next is certain forest management costs are deductible in the year that you have them, particularly if you're a business. So this is where those categories of land ownership activity classification are important. It's important to know whether you're a business or investor. So if you're a business, a lot of these ordinary and necessary management and operating expenses are deductible in the year that you have them. So anything that would be considered ordinary for the forest sector in the area where you live, or where your land, I should say, where your land is located, and necessary for your business management. Investors, it's a little bit different situation right now. Typically, it is theoretically possible for investors to deduct many of these types of activity in the year they occur. However, this category of itemized deductions was suspended, and we're currently in that suspension period. So currently, unfortunately for investors, they're not able to deduct these ordinary and necessary management expenses directly in the year that they occur. So what you can do is you can make an election to capitalize them, which means you're basically adding them into your basis. So you will deduct them in the future when you have a timber sale or some other income from that asset. For personal use or hobby, generally these types of expenses are not really deductible. And then the final category that hopefully none of you will ever have to think about and worry about, but unfortunately it's a fact of timber ownership that this is a risk, that there can be losses associated with natural disasters or other things. So there are different types of losses. Then one we talk about frequently are these casualty losses, which are basically sudden, unexpected, and unusual events such as a fire, windstorm, ice storm, these types of things that basically happen in a very short window of time, like overnight or over a day or two, are the kinds of things that would be deductible as losses. Now, these types of casualty losses are deductible typically for business and investment owners. However, for personal use owners, they're only deductible in if you're within a federally declared disaster area. And the amount that you're able to deduct currently, and I know the Forest Landowner Association is working on changing this. Scott can correct me if I'm misstating anything here, but that the amount you're able to deduct is the lesser of either the loss in fair market value, the basis of that asset. So that that sets a kind of a, you're only able to deduct the lower of those two, which can be a challenge. Sometimes a landowner may have no basis in a stand, or the fair market value may be very low also, even though you've spent money doing it. So this is one type of loss. There are other types of losses, such as theft, condemnation, and other things that might be deductible depending on your situation. And there's also non-casualty events. So think of things that are not quite as sudden as a casualty loss, which could be like losses, death or mortality of trees from drought, insect, or disease that are kind of more progressive and occur over a longer period of time. Those non-casualty losses typically only deductible for business ownerships. Okay, so those are 6 of the most frequent, not necessarily the most frequently utilized, but 6 of the provisions that are most kind of unique in the way they apply to forest land, and that forest landowners have a little bit more questions about typically. So I just want to wrap up with this last note, which is that record and account keeping is really crucial. Most of the time, if a landowner ends up having an audit and owing money after the audit, it would be because of poor record keeping. So it's important to kind of make sure you keep in your records, whether it's on paper or on the computer, in some way that's safe and is really keeping track of everything you're doing, why you're doing it, what the cost was, how many hours you used of your own time, and similar types of information. It's often recommendable to keep like a journal, like where a notebook where you would write down anytime you participate in any kind of activity related to your forest land. And when I say any kind of activity, I mean, if you're attending this webinar because you're a forest landowner and because you want to learn more about managing your forest land, that is something that you would write down in your tree farm journal. You know, that is an activity you're doing. It's taking time out of your day. If you're going to a forest landowner association meeting or conference, that is something you will write down in your tree farm journal, just to document everything you've done, everything you're doing to keep on top of and manage your forest land. It's also really important to keep your actual expenses listed in accounts. And when I say account, I basically just mean record keeping, like keep separate records for costs associated with the land, for costs associated with different stands or tracts of timber. And a lot of these other categories are really important as well. So again, that was a real whirlwind tour of forest taxation. I want to leave this slide up for a little while, as long as I can. Maybe if you need more information, and I was going to say you will need it, but I changed that at the last minute to you may need it. But here are some sources of information that you can use. I want to especially say, if you only able to write down one, that the top one, the timbertax.org, will have links to a lot of these other sources here. But you might want to just pull out your cell phone if you have one, and take a picture of this slide, or just take a screenshot of your screen, so that you'll have these references cited here. But basically, as I was saying, yes, this was just a whirlwind tour, just the very basics of taxes. Apologies, we can't go into more detail here. That webinars link that you'll see right here as the second link, if you appreciate this webinar format, was a series that we did last year of about 6 hour-long webinars. So we were able to go into quite a bit more detail on some of these topics. But again, this was mostly for awareness raising, for education, so that you'll know what to ask about in the future. So thank you very much.
Thank you, Greg. That's great information. And, you know, here at the association, I know we receive phone calls on a pretty regular basis, people asking like, who do I talk to? Where do I go? These resources here are fantastic, because it's, you know, I know just from personal experience, your local H&R Block tax advisor probably isn't going to know a whole lot about this and be able to help you. So going in armed with information and finding out those deductions that you should be taking, and they're there for you, is really important. We have several questions that have popped up in both the chat and the Q&A, and I'm going to try to catch a few of these. Yeah, this is a good question. So, Greg, this question in the Q&A, and then we'll switch over to the chat, is that if you're a resident of one state but own land in another state, what state do you create your plan in, and where do you pay your property tax?
Yes, good question. So you pay property tax in the state where that land is located. So so the rules of that particular state, or of where your land is located, are going to be the rules that apply to you.
Thank you. And question here, is the reforestation tax credit been discontinued, and is it not in effect for 2022?
So when you say the reforestation tax credit, the tax credit was discontinued actually quite a while ago. There was a tax credit, I believe. Tax credit was discontinued around 2004, if I'm not mistaken. So there was I didn't get into this in my presentation, but tax credit is better than a tax deduction, because a tax credit is if you spend $5,000, then it reduces your taxes by $5,000, which is a lot better than a deduction. Yes, that reforestation tax credit has been discontinued. I don't know of any initiative to reestablish it in Congress. So yes, we are stuck with just a deduction at the present.
The deduction, is that the same as just saying an expenditure?
Well, yes and no. So an expenditure is basically the money you've actually spent, right? And then a deduction is whether or not that you can then use that expenditure to reduce your taxable income.
Right.
So not all. So let's say I go out with my buddies for dinner. That could be considered an expense, but that's sort of a personal thing. I'm not allowed to deduct that. But expenses that are considered ordinary and necessary associated with like a business generally can be deducted in most cases.
Great. So a question from Meg Anderson is she's interested in learning more about how time/activities are taken into account for forest taxation. Does it result in a deduction, or does it just help prove it's actually a business or investment versus hobby personal use?
So if I understand the question, you're asking about like your own personal time, like how many hours you as a forest landowner spend kind of managing things. No, you're not able to deduct your own time. That's not considered an expense, that kind of expense. So if you so let's say you go out and you do some road maintenance on your forest land. Just as an example, you go and maybe you buy some gravel, load it into your truck, take it, dump it on the road to fill in some potholes on the road on your forest land. It takes you, I don't know, 5 hours to do that. You spend $500 on gravel and $20 on fuel. Well, the $520 potentially could be deductible, but your time is not a deductible expense. However, the amount of time that you spend could be used to justify your kind of level of activity, your level of how involved you are, which might later help you justify whether you're a business or investor or some other type of activity.
So write down the time, but you can't deduct the time.
Right. I would say it's a good idea to keep track of the time. There are cases where the actual exact hours of time are important. So within the business category of land ownership, there are different levels of what they call participation. And the highest one is called what's called material participation. And there are other lower levels of activity or participation. And so for material participation, you get the best treatment, best tax treatment, like you get the most deductions you can take and things like this, right? And that does have very specific rules about like you have to, it's like 500 hours per year, but there's like 7 different rules where if you meet one or more of those different criteria, then you can be considered a material participant. So if you think you're close to being you should look up those rules, material participation rules. If you think you're close, you definitely should keep track of every hour and every minute you spend on your forest land ownership, because that could be really crucial.
Yeah, and I think you might have just touched on Joan Waldrop's question in the chat about she's assuming some the treasurer responsibilities that are family LLC partnership and duties associated with that, like paying taxes, paying bills, bookkeeping. Do those count towards material participation?
Can you, I'm sorry, I think I might have been looking at the wrong question here.
So sorry, it was in the chat, and so it's one of the last questions in the chat. It's just that she's taking over some treasurer responsibilities, and do those responsibilities like paying the bills for the LLC or tax planning, do those count towards material participation? And it might be your advice there, looking that up, that those specific rules would be.
Assuming treasurer, my family farm. This is one where I'm going to have to defer. This one I think might be a little bit beyond my level of expertise here. I'm going to say I think so, but I'm certainly not an expert on that particular topic. I think like that is one where I think, and maybe not like the H&R Block helper, but the H&R like the real CPAs should have a good grasp of what counts for material participation.
Right. Jim Potts has an interesting question. I've kind of thought about this also. If you live out of state, must you pay income tax in the state where the timber was cut and where you live?
Oh, so that is an interesting question. So
Yeah.
this is going to be dependent on state law. Most state laws are based on where your residency is. So it's generally income tax is strictly based on where you live. However, there may be certain states where if you like own a business in another state, and this is another question that might be a little bit above my pay grade here. So I'm going to defer a little bit and just say it's in most states it's strictly your residency. However, there may be states where that's not always the case. I certainly don't know every state's law.
Great. This last question is really good because a lot of us inherit our forest land or become the owners, and we just our latest issue of Forest Landowner magazine was just a succession issue, and one of the biggest things that I know we have to challenges we have when we take on forest land is knowing what the owners of it did before us, and
yeah,
and sometimes good records weren't kept, or you didn't have those conversations with mom like you should have had about what they were doing. But so this last question is, if a CPA does our taxes but is retired, then I kind of think this relates to succession planning as well. But can you look at historical tax documents and tell how you were being considered? Were you as an investment? Is that something that's clear on the tax records? Like, were we filing as an investment? Were we filing as a business?
You'll have to do a little bit of research. It's not as simple as like there's a box that you check that's
Right.
like business or investment. There's not like one line item that tells you. However, there are forms that are used which are associated with business. And there are other forms that would be used if an activity is associated with an investment. So you should be able to tell based on what forms were filed, whether they're like the profit or loss from business would be Schedule C, I think, whereas investment things are on, oh gosh, I'm going to get the number wrong. It's like 4797, I think, or I might be getting that wrong, but there are definitely like forms that are associated with businesses and forms that are associated with investments. And you should be able to tell based on which forms were filed.
Excellent. Well, Greg, I think those are all the questions that we had posted in the Q&A in the chat. This has been a very informative session. We greatly appreciate your time and the information that you put forward and all the good work that you guys do at the Southern Research Station for USDA. All of Greg's information is listed here. I'm sure you're open to any lingering questions being emailed you. Is that okay?
Sure. Yeah. So sometimes it's hard for a lot of times forest landowners have really specific detailed questions, and I'm not sure I'm not able to answer all of them just because I'm not a tax advisor, I'm not a CPA, and because that's not really my role as in USDA anyway, but I'll do my best to point you in the right direction.
Yeah, and to answer your question during your presentation, yes, the Disaster Reforestation Act, that would change how landowners can deduct losses under casualty loss. That bill was introduced in both the House and the Senate 2 weeks ago. We are pushing hard as an organization to get that across the finish line. It's going to be so vitally important to help landowners reforest after a casualty loss situation. Like you said, they're occurring, they're going to happen. It's just one of the risks we take on with natural resource assets. But with your help and with the help of many others, we'll be able to get that across the finish line this year. Thank you all for your support, participating in this this landowner learning series. We have more webinars that are going to be presented throughout the year, so please watch your inbox for those. We have one planned a month right now, so we hope you can join us for another one. Also, we will have more information at our national conference of private forest landowners being held this June in Nashville. If you want more information about that conference, you can definitely go to our website at forestlandowners.com, learn more about the conference, our upcoming webinars, and also to see recordings of past webinars, including this one. Greg, thank you so much for your time today and all the great information, and we appreciate you being a part of this.
All right. Thank you very much.
All right, take care.